Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. We're counting down to the next VRIC, January 21st and 22nd, 2024. Stay tuned for tickets. And today we have a very special guest, the host of the Nobody Special Finance channel, and also the first person I ever interviewed on my own channel, Commodity Culture. So very near and dear to my heart, it's Mr. Jack Gamble. Welcome to the VRIC channel.
Thank you, Jesse. It's good to talk to you again, and thank you for having me on.
Yeah, great to have you on. And I want to start off with a broader question, and that is when you look around the global economy today, what are the main challenges that stand out to you? I know there's a lot of them, but what are the big ones that are on your radar right now?
Speaking it from a really high level, the biggest problem facing the world, honestly, I think at almost every level is central banks run amok. I think take a look at all of the various problems and issues of the day within society, and I think one way or another, to one extent or another, you can trace this back to central banks, reckless monetary policy, zero interest rate policy, money printing. Combine that with reckless fiscal policy from elected officials and debt spending, and really debt at every level, public and private. I think those two issues combined, if you look at that, almost everything, all the issues plaguing society, you can trace back to that. We're in a crisis right now where we had central banks go burr like crazy during the pandemic. They shut down global production, and then at the same time they flooded the globe with currency. Lo and behold, in a shocking turn of events, that caused the worst inflation we've seen in 50 years. I mean, raise your hand if you're surprised. Nobody should be surprised by that. Now, the overreaction to that inflation issue, now they've created this deflationary death spiral that I think is right around the corner. I think we are going to flip from being on the brink of hyperinflation to one of the worst deflationary recessions the world has ever seen, really since the Great Depression. And if you look at a lot of the data points, it's really suggesting that. I mean, for the first time since 1930, the United States money supply is shrinking. And it's hard to believe after what happened in 2020 that we would be using phrases like dollar shortage. But I really think that's where we're heading, and we're already starting to see the early signs of that. And after living with inflation for a couple of years, most people might look at that and say, oh, well, that's good. There's relief on the horizon. Not necessarily the case. When you get very rapid deflation, it can really unleash mayhem on people. And we're starting to see that in a couple of different corners of the economy.
So, looking at the flip side of that, is there anything at the moment that gives you hope, or maybe at least makes you think that once the dust settles, once this recession is done taking its toll, that we could see a rebuilding, we could see positive developments in the future?
No, nothing at all. Sorry. Yeah, I'm not really known for my optimism. I swear I'm trying to be optimistic. I joke all the time on my channel that I wear it here on my sleeve, Perma Bear, Jack. One of these days I'm going to go on the air and I'm going to say the bottom is in, everything's going to be great. Nowhere to go but up. Things are looking good. It's just not today. I'm optimistic on a local level. I like my situation, and my focus has been to get more local with my own personal economic situation, establish relationships with my local farmers. Unbanking myself has been a very high priority for me personally, and that informs a lot of my investment decisions recently. And you can kind of see that in my channel and the things that I talk about. I think getting local is really optimistic, and I live in a good area. I'm surrounded by good people. I have good neighbors. So that makes me optimistic. Globally, I think the world is still just marching toward this dystopian, totalitarian nightmare. And there are a few voices in the darkness who are calling for sanity, but unfortunately, those voices are few and far between, and they're not amplified, certainly not on this platform. But that does make me a little optimistic that at least, people are starting to call it out, and distrust of governments and institutions is on the rise, and for good reason, justifiably so. So, that is encouraging. But for now, I think things get worse before they get better still.
And I bring it up all the time. Maybe too much people are sick of it, but that's why I moved to the Balkans. because distrust of government is the norm, and all of the woke agenda, all of that nonsense is openly attacked if it ever is tried. So I geographically relocated myself because of what you're speaking about there. Now, I want to dive into some topics you've been covering on your YouTube channel, but first, I'm just curious if you see a deflationary recession ahead that's going to be quite severe, what do you think that's going to mean for the commodities space? For oil, for agricultural commodities, maybe for uranium and some other commodities. How do you will that have a negative impact on all sectors of the market?
Well, like, let's look at that anecdotally at oil, what we just saw in the last few days, right? I mean, it's June 8th right now. I'm not sure when this is going to air, but what was it? 3 days ago, we got a 1 million barrel per day production cut from OPEC. The Saudis announced it. Right? The price of oil went down that day. So there you go. That's what that means for commodities, right? Less supply and price goes down. Well, how does that make sense? That means the market thinks demand is going to go down even more than supply is going down. So for commodities, deflation is not good, at least not speaking in terms of nominal price, right? Deflation means dollars getting more valuable. Again, I can hear people scoffing through the internet right now when the concept of the dollar going up in value. But isn't that what we just saw with oil? Right? We got a market where the supply just got tighter and yet the price went down. And, we're seeing that in all corners now. Less stuff is selling because people cannot afford these higher prices. We're seeing the China opening was a total dud. I mean, just fizzled out. We're seeing transoceanic freight costs are going down. And of course, oil prices are going down along with that. We're seeing the cost of shipping things in the United States is going down. Truckers are hurting now after running round the clock in 2021 during the inflationary boom. Now these guys are just sitting there waiting for a load to show up on the load boards. So, for commodities, it's not good. Deflation means lower prices.
Very interesting analysis. Now let's get to some of your most recent videos. You've got some really interesting ones. And you started off a video on the debt ceiling with the statement, which I agree with, Janet Yellen sucks. So talk to us about the issues she's causing, obviously that the establishment is causing, and what do we have to worry about now that the debt ceiling debacle, at least in terms of all the noise in the headline, seems to be behind us?
So I'll give you a little behind the scenes into the mind of a YouTuber here, I guess. I have a personal thing. When I put out a video, I want my thumbnail, my title, and the first few seconds of my video to be 100% in alignment. All right. I don't do clickbait. You know what you're going to get when you click on one of my videos because I tell you in the title and the thumbnail, and then I get right to it. I don't fluff. All right. There are people that works very well for them and for their channels. I don't do that. All right. I value your time as much as your time is my commodity, right? And I treat it as such. So, I made that video about what comes up after the debt ceiling was coming because everybody was hyperventilating about the debt ceiling. And I started to think, hey, it's what comes after that we need to worry about. And so I just got right to the point. And I said, Janet Yellen sucks. And while that is true and literally and figuratively, it really draws to the point that now that the debt ceiling is behind us, what is going to happen? The Treasury has to go refill their general account, the Treasury general account, Uncle Sam or Aunt Janet's checking, right? So what are they going to do? They're going to go borrow money. Now, typically, when they borrow money, they have to borrow it from someone. Who is that going to be? It's not going to be the Federal Reserve. The Federal Reserve is still a net seller of treasuries. They're still doing quantitative tightening. So that means they're going to have to borrow that money from us, from the bond market, from pensions, from mutual funds, from banks, right? So Janet Yellen is going to suck. She's going to hoover up liquidity out of the bond market. Well, that's going to increase demand for dollars. Increased demand for dollars. The supply of dollars is shrinking. So what does the value of a dollar do when the demand rises and the supply shrinks? The value of a dollar goes up. So that's another reason why I say we're heading towards a deflationary scenario. It just comes down to basic supply and demand. And Janet Yellen did an interview yesterday on CNBC. It's the first time she's spoken in a couple of days now. And she said, get ready for more consolidation in banks. Get ready for restructuring in banks, which, guys, restructuring, okay, restructuring. That's a powerful word. That means somebody failed. That means somebody defaulted. That means, restructuring in banks is a big deal. And she's just like, get ready. There may be additional restructuring in banks. And what she said was massive. And, they just glossed over it in the interview and moved on. So, Yellen sees it coming, even though she told us a few years ago there won't be another crisis in her lifetime. It's another reason Janet Yellen sucks, because she said that. That didn't age well. But really, we're heading towards tighter liquidity. Tighter liquidity means higher interest rates, means higher dollars. And those are all things that are bad for prices of anything, assets, prices of consumer goods. So, yeah, tight liquidity is what's coming after the debt ceiling.
Talk to us about the commercial real estate sector, specifically in San Francisco. You've been talking about that recently on the channel. Feel free to expand to other areas as well. What are you seeing in the commercial real estate there in the United States?
So I've spent a lot of time focusing on some specific anecdotes in San Francisco recently, because I think when the dust settles from this commercial real estate bubble, and it is a bubble, I think San Francisco will be ground zero, much the way Florida and Las Vegas were ground zero for the global financial crisis back in 2008. They were the big bubble markets. And I think San Francisco is just emblematic of the commercial real estate bubble. What's happening in San Francisco is happening to a lesser extent in all the other major cities in the US, but it's just worse in San Francisco because California. But just give you a couple of ideas. Just in the last 2 or 3 weeks, some of these stories to paint a picture of just how bad this real estate bubble is. We had this week, Park Hotels and Resorts walked away from a $725 million CMBS loan. All right, these are loans they took out in 2016 when these two hotels, the Hilton San Francisco Union Square and the Park 55 San Francisco, in 2016, those two hotels were valued at $1.5 billion combined. And so Park took out, at the time it was Hilton, now it's Park, they took out a $725 million interest-only loan at 4.1%. All right, so they still owe $725 million. They're only paying the interest on it. Well, that loan matures in November. And Park just basically said, because of the situation in San Francisco, we're not going to make payments on this loan anymore. They didn't say we're going to sell the building. They didn't say we're going to negotiate or anything. They're just not going to pay. They're handing the keys back to Wells Fargo, who is servicing the loan. Wells Fargo doesn't own these buildings. They're the servicer. These buildings are in CMBS loans. So this was broken up into pieces and sold to pensions, sold to asset managers. All right. So it was worth $1.5 billion in 2016, and now they're walking away from a $725 million loan. That means that building has gone down at least 50% since 2016. That's huge. All right. Think about assets that have fallen, what the average asset has done since 2016. What has your house done? What have stocks done? What's gold done? Bitcoin. And now commercial real estate, you're looking at 50% reductions in value, at least. If they're walking away from that $725 million loan, that means the value of these buildings combined is well below that $725 million. Now, because of the higher interest rates, the reason they're walking away, they have to pay that loan back in November. Well, they can't pay it back. The buildings aren't worth it. It'd be stupid to pay it back. So why not refinance? Well, remember, the Federal Reserve is just on the tail end of the most aggressive rate hike schedule in history that I'm familiar with. I don't know that they've ever hiked as fast as they did. So if they go to refinance, their payments are going to go through the roof. So they can't refinance because Hilton and Park, who are renting the hotels from this company, they can't afford those higher rent payments, the higher cost it would be to service that loan. So because of the higher rates and because nobody's going to San Francisco anymore, I mentioned in that video, I can take in the same sights and smells of San Francisco if I go pop the lid on my septic tank on the side of my house. So why would I go to the travel to that city? I jokingly say that these are people's lives are being destroyed. And, my heart goes out to the people who are living in these conditions, but it is what it is. And if we can't joke about it, what can you do? And unfortunately, San Francisco, the leadership in that city is, their priority is giving out free needles to drug addicts and making sure shoplifters don't get arrested. Lo and behold, it's hard to do business. And so the businesses don't need the buildings. And so the buildings are worthless. A couple of other, stories. 550 California Street, was listed for $165 million a year ago. It just sold for $46 million. Wells Fargo's taking a $60 million hit on that. 350 California Street, right down the street. It was listed in 2020 for $250 million. It was just sold for $60 million. And, that's in 3 years. The prices did that. That's owned by US Bancorp. So what do you have here? You have entire city skylines full of these buildings that are worth half, sometimes much less than half of what they were valued at just a few years ago. These buildings are sitting on the balance sheets of banks. They are in your pensions. They're in your mutual funds, your 401ks, your real estate investment trusts. Right? These are not rich guy problems. Chances are, if you're watching this video, you are exposed to these buildings, whether you know it or not. And what we saw in March, we saw banks failing. Those banks were failing because of losses in U.S. treasuries. Right? Just the rising interest rates on government bonds caused those values to go down. So the commercial real estate losses have not even really begun to hit the balance sheets of these banks. These buildings are all sitting on the bank's balance sheets or in our pensions balance sheets based on values that were determined years ago. And we've just seen in San Francisco what those values have done. They're declining almost 50% on average. And extrapolate that across every city skyline. I mean, look at a picture of the New York City skyline, all those buildings, every single one of them going down 30, 40, 50%. What does that look like for banks and for pensions? And, you mentioned ESG and wokeism. I think we're probably on the brink pretty soon where you're going to start to see asset managers are going to start trying to lean on companies to force people back into the office to make these buildings necessary as part of the S in ESG, that it's socially responsible to prop up these failing buildings in these failing cities. Why? Because, well, the asset managers who give those ESG scores are exposed to those same assets. And, a lot of companies will fall in line. We're already starting to see that. A lot of tech companies are backtracking and trying to force people back into the offices. The companies that don't do that will prosper because throwing money at chasing social agendas is not a good business proposition. And so the companies that don't do that will gain market share.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday and I love writing it. Hit that link below to subscribe. All right, back to the interview.
If we were to speculate, what do you think is behind these seemingly insane policies, not allowing people to, catch shoplifters, not charging people with certain crimes, seemingly encouraging drug use, as is happening in places like Portland as well? Is there a sinister objective that these politicians have behind all of this, or is this just pure incompetence, hubris, arrogance? What's your opinion?
Yeah, some of it, it's probably grounded in altruism. I think a lot of people, nobody likes to see these tent cities and some of the images coming out of our cities of drug addicts. And we do have a problem of mental health and a drug crisis in the US. And the logic behind providing free hypodermic needles is that these people are going to do this anyway. Let's make sure that they're not spreading diseases while doing it. Let's try to keep them as safe as possible. I guess I understand the logic behind it, but good intentions alone are not enough. You have to look at the net effect. And so what are you doing when you provide these things? You're attracting more intravenous drug users to that area. Well, if you're a person, just an average person who's just trying to raise kids, have a family, do life, do business in that area, and your government is attracting intravenous drug users to your doorstep, you should get a say in that. Nobody wants to live like that. And so people are leaving. Now, I could put my tinfoil hat on and say, first you create the crisis and then you offer up the solution that you've always wanted. And, lingering in the background are those central bank digital currency people, right? Those, I don't want to get your channel in trouble. I always say the FEW backwards. You can kind of figure out who I'm talking about, right, Klaus? Those guys, they're just about the worst people in the world, if you ask me. And, everything that happens, all the crises that, if you ask me, they create, the wars that they create, they're always sitting there saying the solution is to give us more power over your life and then we'll save you. And, a lot of the lemmings just take that advice and just give them the power And then by the time they realize maybe that wasn't such a good idea, it's already too late. So is some of that going on? Yeah, I'm willing to bet that those people are also taking advantage of it, but they're taking advantage of people's good intentions. It is good and it is right to want to help a drug addict break their habit to try to make sure diseases aren't spread, but you have to make sure that the cure isn't worse than the disease. And right now, what they're doing is they're just encouraging those self-destructive behaviors through those policies, and it's destroying the whole city.
Yeah, and I definitely get what you're saying there. It's a fine line to walk because I also don't think that people should be thrown in jail for an addiction they have that is very often outside of their control. But like you said, if all you're doing is providing clean needles and you're not providing a very strong social network to then try to rehabilitate these people, offer them help, etc., then it's kind of just attracting more and more users to one geographic area, as you mentioned. So I want to shift to the BRICS nations. There's been a lot of hype out there about de-dollarization and the advent of a new BRICS currency. But you pointed out in a recent video, Argentina paying for Chinese imports in yuan isn't happening for the reason that most people think it is. So could you break that down for us?
Yeah, I do think the world is de-dollarizing, but it's happening at a much, much slower pace. We're talking across decades, not across months. It's happening at a much slower pace than some of the more alarmist channels are saying. What happened in Argentina specifically was not a case of an offensive attack against the dollar by a BRICS country. What happened in Argentina was a country that is desperate for more dollars, that can't get more dollars. And so it's a defensive move. They're going to pay for imports in yuan because they're trying to save their dollars because they need those dollars to prop up their own failing currency. Argentina, first of all, monetary debasement. Argentina has increased their money supply something like 13-fold over the last couple of years. If you think Jay Powell and his burr was bad, look at what the central bank in Argentina has done. Good Lord. All right. So, of course, the Argentina peso is hyperinflating. Well, one of the ways that the Argentine central bank is trying to fight this hyperinflation there is by dumping the dollars that they have in order to buy their own peso. That's having the value of propping up the value of the peso. Well, Argentina gets its dollars by selling food, right? They're a big net food exporter. Well, they're struggling because they've had a pretty wicked drought in Argentina for the last year or two. So their food exports are down. So the dollars that are coming in are down. So they're running out of dollars to prop up the failing peso. And so they're basically ordering their own people to not transact in dollars because as the peso fails, local people are saying, well, I'll pay you in dollars. So the government is trying to crack down on that. Again, this is not an offensive against the dollar. This is a defensive move of a failing currency trying to protect its decline against the dollar. So this is a dollar shortage. This is not, a lot of the fear of the BRICS currency is all of the dollars coming home that we've exported over the last 50 years. And eventually that could happen, but that's not what's happening right now. Right now, all the countries that are BRICSing are desperate for more dollars. And all these moves is about maintaining and holding the dollars they have so that they can prop up their failing currencies with it. We're seeing the same thing in Turkey. It's not a BRICS country, but the lira is hyperinflating against the dollar. And Turkey is doing all of these things to try to prevent the bleeding of dollars so that their central bank can use those dollars to prop up the failing lira. So I don't think that the rapid de-dollarization is happening. And if you look at historically, whenever the world reserve currency has failed, there's been a couple of common themes. Number one, the existing currency debases, usually by losing a gold or silver backing. Check. The dollar did that in 1971. But the reserve currency that rises to replace it historically, and this goes all the way back through the UK, the Netherlands, the Spaniards. The reserve currency that comes in to replace it is, number one, backed by gold or silver. There is no currency on the world that meets that standard right now. The country that issues that currency has a global trade empire. Again, nobody meets that standard other than the US, China a little bit. And that country also had been a naval superpower able to enforce that global trade empire. There's no country and no currency in the world right now that meets that standard. There's no country that has a gold-backed currency, a international trade empire, and a navy that can protect it. So there is no threat to the dollar's dominance on the planet right now. And, they say, oh, BRICS might have a gold-backed currency. BRICS can't have a gold-backed currency, right? The PBOC, the central bank in China, just announced a second plan in 7 months to prop up the Chinese property market. They had their 16-point plan they released in November to bail out the property market. It failed. Here comes their next plan. That story broke this week. So China's going to print to try to reinflate their property bubble. Well, you can't do that when you have a gold-backed currency. So the idea that BRICS is just going to have a gold-backed currency, they can't do it. I mean, South Africa is going to have to print in order to keep the lights on. There's a nationwide blackout sweeping the country. So all of these BRICS countries that are ganging up on the dollar right now, their problems are worse than the dollar's problems. So I understand what they're trying to do. It sounds great, but actually doing that is going to prove to be very difficult.
Well, let's switch to the precious metals and to any other assets that you think are worth holding in times like these. I know you mentioned at the top of the show that, a deflationary recession would be bad for commodities. Do you put gold and silver in a different category as sound money in this situation?
So I don't separate gold and silver from the deflation is bad from commodities argument. I do think that a deflationary recession will be bearish for gold and silver dollar prices, nominal prices in dollars. All right. If there are less dollars, then there's less dollars to chase assets, and gold and silver are assets just like anything else is. And so if dollars become more valuable, if people are desperate for more dollars, then people will sell anything and everything they can to get those dollars, and that will include gold and silver. I won't. I love gold and silver. I'm not going to sell, but a lot of other people will. So I do think a deflationary recession is bearish for dollar prices of gold and silver. Now, that doesn't mean I'm bearish gold and silver, because I view gold and silver as much as an investment as I do a way to unbank myself, as a way to, divorce myself from the establishment world order, which is running this world into the ground. Still dollar cost average into gold or silver for that reason, because I'm unbanking myself. The banking crisis, they're saying, whoo, thank God that mini banking crisis is over. It's not over, not even close. Just because it's been, 3 weeks since a bank failed and they're on TV sounding the all clear? Guys, we're 2 months removed from the second, third, and fourth largest bank failures in U.S. history, plus a European G-SIB just went down. And they're calling that a mini crisis? The messaging coming from the establishment financial press is insane right now. So I still like gold and silver as a way to unbank myself, but you also have to face reality. The dollar value of gold and silver will likely go down if we get this deflationary death spiral. I still think you want to own those things because they may get more valuable relative to goods and services at the same time. And, if the reason why dollars go up in value and dollars get rare in a deflationary recession is because dollars disappear, debt goes up in smoke, banks fail. So, if you're sitting there saying, no, it's all right, I'm just going to pile into gold and silver when they get cheaper, your money may not be there when you go to do that. So, and plus the premiums could just jack up if you go to buy physical. So, I still like gold and silver for that reason, but face facts, if you're trading derivatives, this is not a good time to pile into gold derivatives or silver derivatives, because the nominal value is probably heading lower.
And are there any other assets or sectors that you could see potentially doing well, even in the event of a deflationary recession?
Yeah, I also like Bitcoin, which, hey, I can hear the fangs coming out with this one. I know that the Bitcoiners don't always get along with the gold and silver guys. I'm a rarity. I like both. I'm team both. And I like Bitcoin for the same reasons I like gold and silver. It's a way to unbank myself, a way to divorce myself from the establishment financial system. There are pitfalls with Bitcoin. Unfortunately, Bitcoin's nominal price right now is tied to some people who, in my opinion, are some of the biggest scumbags on the planet. Here's looking at you, Changpeng Zhou over at Binance, and, some of these just downright crooks, Sam Bankman-Fried. The crypto collapses that are going on in the regulatory crackdown on a lot of these crooks who, up until a few months ago, these crooks were in bed with the same regulators who were taking them down now. Let's not forget about that. But Bitcoin itself is not crypto exchanges. I've been saying for years now, really since my channel started, don't leave your coins on the exchange. Don't get entangled in FI schemes. Anybody offering you a 15% risk-free reward is selling you snake oil. Run, do not walk for the exits when that happens. So Bitcoin has its own problems. It's not a Bitcoin problem, but the Bitcoin price is tied to the fate of a lot of these outfits that are just downright scams. But when the smoke clears from that and the Bitcoin price drops, as I think it will when these things happen, you're left with an asset that has scarcity. You know, I mentioned before some of the qualities of reserve currencies and things that have risen to replace the previous reserve currency. The closest thing to a threat to the dollar as a reserve currency, believe it or not, is Bitcoin right now. Now, Bitcoin has managed scarcity, and all of the reserve currencies that have ever become reserve currencies have been tied to gold or silver. And that's because when you're tied to gold and silver, your scarcity is enforced. Bitcoin is the only global currency right now that has enforced scarcity. It can't be printed. It's mine. There's only ever going to be 21 million. That's it. And now Bitcoin doesn't have a global trade empire or a navy, but you could argue Bitcoin doesn't need a global empire or a navy to enforce it if people are willing to use it. And so I like Bitcoin for that reason. Now, Bitcoin operates on a totally different location in the risk reward spectrum as gold or silver. So Bitcoin is much more speculative. So I don't own Bitcoin instead of gold or silver. I don't own gold or silver instead of Bitcoin. They don't even live in the same space, but they are both ways to unbank yourself and to safely preserve your wealth from the mess that they, with a capital T, have created in the financial system.
Yeah, I definitely agree with you there. I'm also one of the few people I know of who holds both gold and Bitcoin. I see them as complementary assets. There's this bizarre debate that goes on online, and it seems to get particularly vicious. I don't know what it is. It's the arrogant Bitcoin maxis saying that gold sucks, and then the gold guys come out and they haven't even researched Bitcoin and they start trashing it, and it's just it's crazy. I've tried to break it up before. I've literally come on and said, guys, it doesn't really matter. If you don't like Bitcoin, don't buy it. If you don't like gold, don't buy it. Stay in your own camps and let's watch this all unfold. And under this tweet I made, there was a massive debate that broke out between Bitcoin maxis and gold bugs. I was like, all right, guys, carry on. I can't
All right.
win this
Thanks
one.
for the engagement, guys. Yeah.
Yeah, exactly.
If I could comment on that, there's two things I've observed with that, and I'm going to poke a little fun at both sides here, and I've got friends on both sides of this argument, so I love you guys. All right, the Bitcoin guys saying to the gold guys, the pet rock thing. Oh, enjoy your pet rock, caveman. Guys, gold has been money as long as money has been a thing. Gold has been it. All right. So are you seriously saying that today is the day that thousands of years of history no longer applies? Is really like cemeteries aren't full of people who have made similar claims that, oh, this time is different. That's what you're saying when you say pet rock, gold is no longer money because Bitcoin. You're throwing out thousands of years of economic precedent saying, nope, this time is different. So it's a silly argument to make. At the same time, you gold guys who are yelling at Bitcoin, oh, it's no intrinsic value, it's backed by nothing. Let's admit something right now. Your hang up on Bitcoin is the fact that Bitcoin doesn't have mass. It doesn't exist physically. That is the entirety of your argument, because it's a code that anyone can look at and see a fixed supply. It is a fixed supply. You cannot make it out of thin air. It doesn't have mass, but you can't make it out of thin air, guys. It's managed scarcity. And really, when it boils down to it, if the power grid goes down, your Bitcoin goes down with it. No, it doesn't. Your Bitcoin stays exactly where it was on the blockchain. Maybe you can't access it, but you know what? If the power goes down worldwide, you know what your gold is going to be good for? Clubbing your neighbor over the head to take what he's got to eat. Because if there's a worldwide power outage with 7 billion people on the planet, nobody's going to care about gold anymore. People are just going to be starving to death. So there's a lot of silly arguments on both sides of that debate. I find them very entertaining, and thanks for the engagement.
Yeah, completely agreed. We either need to stay in our own camps or everybody come together and realize that it's all sound money. Well, thank you so much for joining us today, Jack. For those who want to learn more and check out your channel, talk to us about Nobody Special Finance.
Yep. Channel's Nobody Special Finance. I'm on YouTube. I'm also, everything I put out also goes to Twitter. I'm at JG Nuke on Twitter. I do a live stream every morning, financial news. I don't do puff. I don't do fluff. I don't do clickbait. I will respect your time. If you guys come over to my channel, I am going to tell you, here's what's going on in the world today. And if I put out a video, it's because this thing needs to be talked about. This is news. I don't just reiterate the same thing over and over again. So I like to treat your time with value. And, well, come on, like and subscribe.
Awesome. I'll put a link in the description below to both the YouTube and the Twitter. Thank you once again, Jack, and definitely hope to do this again soon.
Thanks, Jesse. Pleasure to talk to you.